Hey guys, what's up? Hitori here. Welcome to episode 31 of the weekly market outlook with JXProp. Now, in this episode, I'll be covering the DXY, gold, NASDAQ, pound dollar, and Bitcoin. If you have any other asset classes you'd like me to cover, just leave a comment down below and I'll get back to it in the next weekly outlook. Also, we do have a free Discord where you can join and talk to the TradeXProp team. Alright, so without further ado, let's get straight into the content. Alright, so here we have the DXY on the daily chart, and before I get into the technicals, let's kind of recap a bit on what happened last week. As you know, we are in the last month of the year, and just last week we had the final NFP. Well, technically it's the second final NFP of the year. The next NFP will be in January, which will complete as the final NFP of 2024. But let's just recap what happened last week. Well, in the NFP report, we saw a new increase in jobs created. It exceeded the forecast by around 9,000 jobs created, so that's great because it actually marks a continuation of steady hiring, which further reinforces the strength of the economy. But even though you see the NFP reports in itself, we saw more jobs being added. The thing is, we are also seeing unemployment rate increase from 4.1% to 4.2%, which kind of creates a mixed signal, because when new jobs are created and unemployment rate increases, it kind of cancels each other out. So from those two reports, we don't really have a clear picture on how the labor market is actually performing. So we have to look at another metric, which is wage growth. And looking at wage growth, we actually see that the average hourly earnings has improved, which was quite frankly a positive surprise. I think most people weren't expecting that. Even though it was a slight improvement and it wasn't extraordinary, it does showcases to us that we are at least in a balanced labor market following the increase of wages and NFP reports and the unemployment rate as well. But more importantly, how did the markets react to this news? Well, looking here at the DXY on the daily on Friday when the report came out, we don't really see much. We're kind of in this Goldilocks scenario where it's not too hot and not too cold. It's just stable, and we can kind of see that the financial markets, at least at this current point in time, is actually appeased, because with the strong job growth, if we don't overheat from this job growth, it actually avoids the risk of expected prolonged inflation, right? And a slight rise in unemployment as well as a moderate growth in wages, it actually reduces pressure on the Fed to kind of delay rate cuts. Okay, so with this in mind, moving forward, since the markets are always forward-looking, we should always have our own expectations when we are looking at even the basics of fundamentals. Is that what can we expect the Fed or the markets to react to the current information that we have? Well, the mixed reports that we got from both NFP as well as the unemployment rate, and then adding in, of course, the wage growth, we kind of have expectations now being put in place for a December rate cut. With little upcoming, of course, in the econ calendar, obviously, except the upcoming CPI report. We don't think that the trajectory for this December rate cut is likely to be changed. And if we look at the here we are, the Fed Watch tool, we can actually see that there is an 86% probability, or at least people 86% of participants are expecting a 25 basis point rate cut at the next meeting on December 18. So actually the current forecast that people are expecting is that rates, they may hold steady beyond December unless we see more of a weaker econ data coming out from things like maybe jobs report or PMI, the purchasing managers index. If we see weakness in these two reports, for example, we could probably see a different outcome. But as of now, with the current data and information that we all have, we are still expecting, of course, a 25 basis point rate cuts. Okay, but adding into, of course, my good friend Powell's comments, he described the US economy as, currently at least, as extraordinary. He is emphasizing the strength of the US economy compared to a few of the other major global economies as well, which kind of showcases to you that the Fed at least have a optimistic outlook on the economy, supported by the strong indicators, of course. So coming back here to the charts on the DXY, I am still bullish, right? Based on sentiment, based on fundamentals. I think that this environment is pretty balanced and it is a good metric or a good environment for the DXY to reach into higher prices. And if we zoom in here, where we currently are is right around the 105 mark. And if we expect the dollar to keep rising, we might see short-term areas of roadblocks, maybe around this 107 level and reaching higher. This level right here at 1010. But we have this previous area of support right here at 109 that was previously broken. Support right here, and it was broken right here. This isn't a solid area of resistance just yet, but definitely price could come up here and then reject off of this, seeing as how it was previously an area of importance for around almost 60 days. So this is an area that held for almost 2 months, which shows you that it is an area of significance. So coming back to current price action, the nearest two levels, of course, is this area at 107, and we are currently finding support at this area of 105. So we are holding this level right here, and if we do break above this recent resistance at 106, we could see price continue to capitulate itself upwards into the next areas of resistance. Breaks and retests are pretty much the safest route as of now, but of course we might not even get retested. Right here we did see a lucky area of support at 104. Price broke this resistance, we did see a retest and a bounce higher, but looking back, we might not see that every single time. Like when we broke this resistance right here, right, we never saw that retest until a long time. So definitely expect that retest to hold if it does happen, but at the same time, you definitely could split your positions to go long whenever price breaks an area of resistance, right? Like enter like a riskier entry, of course, with a smaller sizing, and then if it does come down, you are all good because you have risk an adequate amount, and then wait for that retest to bounce higher. Okay, but as of now, support is expected around 105. If we do break beneath this, we could come all the way down, filling in this clean traffic up until 104, and then likewise, the next area of support is around 103. We don't know which level or which area will hold. The best case scenario is to always use multiple entries if possible, or if you want to play the safe route and risk big on one position, always make sure that at least you have some form of confirmation when you're entering at those areas, because we are long on the dollar, yes, but at the same time, we don't know where it will reverse from or respect to go higher. So we have to always wait for that confirmation. Okay, so Upwards right here on the top, we do have a few areas of structure right here, but if we do break beneath break above 110, definitely we could have an area right here at around 103, 113. But until we reach that area, I'm not going to consider that, seeing as we will have way too many areas of structure to keep in mind, of course. Okay, of course, you should always consult your econ calendar. Next week we do have the upcoming CPI and PPI for the USD, and we have a few other high impact euro news on Thursday, as well as a GDP report for the Great Britain pound on Friday. So quite a high impact week, I'd say. CPI and PPI are pretty important metrics to showcase the strength of the US economy, as well as the upcoming unemployment claims. So always do keep in mind on these news releases. Monday and Tuesday likely might be a bit slower compared to the rest of the weeks, but even then, like look at NFP. We barely made any movement on such a big report as NFP. So these things, they aren't confirmed, like even though we know for a fact that these times right here in local Malaysian time GMT +8, we know that they are high impact, but it's not exactly just because we have a news release that the day will be a large expensive day. It could also end in something like this, which is pretty much an indecision candle. It's pretty indecisive in where it wants to go. There's a small body to a weak ratio, so yeah, definitely keep that in mind just when you're taking trades off of an intraday perspective. Okay, next up we have our good friend gold. Okay, so for gold, looking at this price action right here, we're pretty much in this just big range, and on an intraday perspective, there really isn't any movement. Right, as of now, there's no bias, there's no movement. So until we either break above this high and this low, we are pretty much just caught within this large range of around like 500, almost 600 points. But of course, long term, at least, midterm to long term, I also don't really know where it wants to go. I do think that this pullback on gold could continue for sure, because it is end of the year. We might see a rebalancing of flows to different, industries. We are going to likely see profit taking on gold, but this might be that pullback, even though it's not really a large pullback per se, but this could be that pullback. So next week, at least, based on the expected rate cut later, that will weaken the US dollar. This pair could see an increase in price due to how people are going to be looking at it as an attractive investment, right? For traders, for investors, we might be seeing higher gold prices. Of course, as of recently, we know that even though the dollar has been continuing lower, and gold, we did see this during the mid of this year, and then suddenly came that large bullish run on gold. And in theory, we should be seeing lower gold prices because it's traded in gold, so it's traded in the USD. So if the USD is strengthening, gold should be seen as less attractive of an investment to investors. But we now see this divergence on gold where the USD is increasing right here, but so is gold also going up. So it's not exactly a 100% perfect divergence or correlation, should I say it, but definitely it does impact it somewhat in the short term at least, right? So despite the expected rate cuts, I'm still bullish and long on the dollar, and any pullbacks are probably just like short-term pullbacks. For gold, I'm biased. I'm not biased, in any shape or form. I don't know if it will go up or down. If I had to give a bias, gun to my head, I would say bearish gold. But until you break out of this range and show commitment to one side, I cannot say that we're going to be bullish or bearish either way. So if we break above 2666, we could see a move higher into around 2715 based off the Orenda data feed. But I want to see a break and retest of this level for a more solid bullish bias. But if we do break beneath 2605, come down here and break this, we could see clean traffic down all the way until right around 2490. Okay, but until then, in this range, the only place you can make are short-term intraday ping pong zigzag, whatever you want to call them. You cannot take any trades within this range and hold it until the breakout, because we don't know when and we don't know where it will break out to. Okay, so intraday plays, sure, but long-term holdings, probably best to wait and save your equity for other asset classes if you do trade them. If you don't trade them and you only trade gold, yeah, for sure, just play within this range. All right, because there is nothing worse than putting your money in a rangy asset class when you are a long-term trader per se. All right, so that is gold. Now let's move on to the NASDAQ. So right here we have the US 100 on capital.com, and we are still trading and making new all-time highs on the NASDAQ. Obviously looking at market sentiment, both the stock market as well as the broader risk assets, they appear to be content with the current mixed / middle ground data from the economic standpoint, because this actually suggests that we might see a stable economy without undue inflationary or deflationary pressures, right? Because despite higher than recent interest rates, the Fed still has room and is expected to continue cutting rates, right? So with the economy being so strong and with businesses just thriving out of nowhere, it's really hard for investors to justify a bearish market outlook on indexes, right? That goes for S&P, that goes for Russell, but the NASDAQ is extremely strong right here, right? We are making all-time highs, and we are at all-time highs right now, just breaking above. There's no levels to the left because this is the current all-time highs. So with this in mind, any short-term pullbacks, they are good areas to look for longs to continue at, right? These types of plays on such a trendy and volatile asset like the NASDAQ is very good to play from. So any pullbacks into these previous areas of structure, for example here at 21177, like around this price point, is a good area to buy at. If it drops down lower, sure, at 20k, look for longs. Here, at 20.5k, sure, look for longs, because you're not going to want to fight against a trend, against such a big bullish trend. Sure, you could be expecting something like this to happen for sure, but most of the times it will be just short-term dips and bounces and dips and bounces and dips. More times you will see this happen. So just trade with the current flow, because there's nothing pointing to a bearish market. Not technicals, not sentiment, not fundamentals for sure. So you shouldn't be betting against the NASDAQ having a large drop. Oh, let me just delete this. Yeah, you shouldn't be expecting the NASDAQ to have a large drop until it actually happens and we're seeing sentiment start to drive into a bearish NASDAQ or a bearish indices. Right, so as of now, definitely short-term sales for sure, always possible. That depends on your intraday models, but long-term or mid-term to long-term holdings, definitely look for longs when you start to pulling back into areas of supports and then forming new areas of supports, definitely look for those break and retests, right? And right here we have a few to play from, so definitely keep these areas of importance in mind. I'm not saying that they will be holding 100%, but I'm saying that there's a high probability that if price were to continue higher, it is going to continue higher from a previous level of support. Okay, so keep that in mind when you're trading swing or trading intra-week swing or position trading. The NASDAQ, for example, just look for potential good areas of interest to get into at for longs. All right. Yep. So that's the NASDAQ. Let's look at pound, dollar, or cable. As of now, we are in a big bearish run to the downside. We may have seen a bottom right around here, taking out this previous area of resistance, retesting it, and then making a higher low. So we could see some short-term pullbacks as of now on pound dollar, on cable, as some people call it. But still, overall, we are in this big, large bearish move. So do keep that in mind when you're trading against the market. But seeing just recent price action form, this is where we currently are. Last week we broke above the previous resistance at around 1.27. We broke past it right here, and then now we're retesting it and then failing to close beneath it. Now this is of course still a bit too early to call that this is a support formed, because I will need another strong bullish candle on the daily to call this a support. But if you are trading on Monday and Tuesday and you're seeing us kind of thread higher after forming supports, breaking like a 1 hour, 4 hour area of resistance, then you could say that this is your nearby target, which is the previous week's high, right? Of course, if we drop down beneath here, we are now caught within this not too large of a range. It's around like 80 points, not too big of a range. But if you break beneath this, then we could see price correct down for around 120 points down into 1.25, right? Because we are still pretty much bearish on cable, and until we see more structure being formed or retest a really large pivotal area of structure in the past, we can't say we are for sure bullish, right? Sure, this could be a short-term bullish movement. Some people might see this as a chalk or a flip or a shift in market structure. Of course, that's up to them, but what we're seeing right now is just potential higher highs and higher lows being formed within the overall larger bearish picture. Okay, but I want to see a retest of within this price region, ideally around the 1.29 mark, to see if we break it or if we continue to respect it to continue lower. Okay, so that's what I'm looking at on cable. Just short-term bullish mayhaps, but definitely still in this overall bearish leg structure right here. All right, so coming up to the last pair right here, we have Bitcoin and the 800k. I outlined in the previous outlooks that this move right here is likely the early fake out before the round 100k, and obviously when we run all-time highs, most of the time, like a rough number, I probably say, I said like 70% of the time we continue going, which we did. We went all the way up until 104, which is crazy, right on the dot right here, 104. So Bitcoin is kind of like, for me, the S&P 500 of crypto. It should continue to be bullish in the long run, of course, but short term, seeing as a lot of people have potentially exited out of their positions at the magical number of 100k, right? We could see short term dips in the nearer picture, right? We're seeing markets kind of slow down right here at the top. We're kind of showing a range right here compared to this large impulsive move. So I definitely think that there is a possibility that we could continue to dip lower from here in form of a bearish pullback, but until then we won't know until it actually happens. You could just keep going up, right? So if we do break down any of these supports right down here, this is a large range to correct. We have clean traffic right here for around almost a 15% move right here. So I'd say that Bitcoin still has room to correct lower, but if you are investing in Bitcoin, just know that it's a great time to kind of DCA into your entries. Or if you trade Bitcoin, just keep an eye on previous areas of structures. Once they get broken, you could use them for short-term sells until you form some new support or come into previous areas of structure right here. You could use those sells because they could play out very quickly, of course. So definitely this stagnated movement is a bit concerning for Bitcoin bulls, but I'm still bullish on Bitcoin as of now until you break these areas of daily supports. I'm expecting a pullback lower into this big range right here to find some new support, or better off you could come down into any areas of these supports right here down below to find support to bounce higher from. Okay, so yeah, that's pretty much it for this week's outlook. If you have any other questions, you could just leave a comment down below or just tag me in our free Discord and I'll get back to your message whenever I see them. Alright, so last month of the year, take care, stay safe. Generally expect crappier price action and rangier price action, but like I said, it's not an excuse to not pay attention to what the markets are showcasing to you. Okay, peace out.